Let's talk about the top 5 trends in the San Diego housing market. First, the number of homes for sale. It's obviously been the story for the last several years, and after bouncing along at a record low number of homeowners willing to sell in the high mortgage rate environment, there are finally now more new sellers in 2024. Now, most sellers are still hunkering down, not wanting to move because they've got a 3 or 3.5% fixed rate mortgage, but and we're still down over historic norms. March 2024 had 39% fewer homeowners compared to the pre-COVID average, but we had 16% more new home sellers than we did in 2023, up 1,100-ish, and that's going to dramatically improve once rates drop below 6.5%. So the rise in inventory, more homes on the market than last year. In 2023, the active inventory actually continued to drop from January through mid-April. But this year, we are rising 2,376 homes to start the year in January, and we're at 3,202 homes today, 35% more. But it should be noted that it's a direct result of homes coming on the market in the higher price ranges, which take a little bit longer to sell compared to the lower ranges. Homes below 750 from January through March were actually down 4%. 4% fewer homes were placed on the market than there were last year. For homes above 750, there were 26% more homes. So the higher the price range, the longer it takes to sell, which has allowed more homes to accumulate on the market and for inventory to rise. Demand has been bouncing along at a bottom like it did last year. The current demand trend line cannot get really much lower than it currently is. Demand is a snapshot of the number of new pending sales over the prior month is at 1,880 pending sales, slightly less than last year's 1,949. Demand's only going to break when higher rates drop substantially below the 7% threshold. Until then, demand's going to continue to bounce along at the bottom. The market speed is a bit slower than last year. The expected market time, which is the number of days it takes to sell a San Diego County home at the current buying pace, which is a function of supply and demand. Today's expected market time is 51 days compared to 31 days last year. And as long as the inventory growth continues to outpace last year's growth, the market's going to continue to slow faster than it last year. In the trenches, the difference between 51 days and 31 days is slightly evident. But if the current trend continues year over year, comparisons are going to be much more noticeable. Higher mortgage rates are muffling the true potential of the San Diego County market. There's a lot more people that would want to buy if rates were lower. Rates were over 8% in October last year, and they plunged back down to 6.5% by mid-December, and they started 2024 at just over 6.5%, like January 2023. But too hot of economic data has pushed rates back up. January and February, sales were up 6% to last year. But by the time we get to March, sales were down about 0.5% due to the declining rates. And today's 7.5 is higher than last year's 6.5. So as long as rates stay above the 7% threshold, it's going to impact the number of closed sales. So if you do have any questions about the market, whether you're looking to buy, sell, invest, please reach out. I always love to hear from you. It doesn't matter if you are looking to do something in 9 days or 9 months. I'd love to hear from you regardless. We'll keep you updated on what's happening in the market and look to hear from you. Take care.